Hey everyone, I hope you're having a really good Monday. I just wanted to do a quick video on how to determine pullbacks. Now, for those of you that are using the market structure indicator, we'll make the video based around that. For those of you that aren't, the concept of how to determine pullbacks is the exact same. To save time and make this really easy to spot, we're just going to use the market structure indicator. Now, the numbers that I gave you guys that this comes preloaded with, those are numbers that I found are pretty decent numbers for Euro USD. Now, as you get into a more aggressive pair, these numbers will obviously change. There's also numbers I gave you guys for NASDAQ and gold. To be completely honest, I don't really use this market structure indicator on NASDAQ or gold. We found that the 5 pivot point market structure method works better for those pairs. And for those of you that are wondering what that is, Brian will be making a video on it, and he will actually be showing you guys what he does for that. And it's a different way of mapping structure, but I found it works better for pairs such as NASDAQ and the gold. Reason being is NASDAQ never pulls back consistently, and neither does gold. So any numbers we found have never worked consistently, where it consistently develops certain candle patterns such as this, which we can use as pivot points, and we can actually map structure doing that. So stay tuned for that from Brian. This particular video will be determining pullbacks, and for the most part, these pullbacks will work the best for Forex pairs. So as I said, the precision market structure indicator is preloaded for Euro USD. So we don't really have to touch it too much with Euro USD. For those of you that maybe find you have too much structure, you can just adjust the numbers until you are happy. To give you an example, we're going to do GBP USD and GBP JPY, which are quite more aggressive. Now, the current settings I have on this are the Euro USD settings, and I don't actually use this for GU. I use different numbers. I posted them in our Discord, and by the end of this video, you guys will see the numbers I use for this as well. As we can see, this looks like a mess. It's disastrous. That's a little too much structure for my liking. So the guideline I gave you guys was the anywhere from 10 to 15 pips for 15 minute, anywhere from 40 to 50 pips for 4 hour, and 80 to 100 pips for daily. Now, these are the guidelines that work for Euro USD and GBP USD. When you get into an even more aggressive pair such as GBP JPY, you're actually going to go even a little higher than that. Or for those of you that trade GBP AUD, those are very aggressive pairs. They move more, so the pullback's got to be more. So we are currently on the 15-minute time frame, and as you guys can see, this is a disaster. That's ugly structure. Like, we don't want to work with anything like that. So what we're going to start doing is just slowly increasing numbers to see where we like it. Now, for myself, this is what I run on the 15-minute on GBP USD. And we'll just let the market structure do its thing, clean it up. Now you can see we got way too many structure points. We don't need it. Now if I look at this is fairly clean. Structure looks pretty legit to me. I'm quite happy with this. These are numbers I have tested for myself with GBP USD. They work. Now, if you find this is not enough for you, you'd like more, you would just go back into market structure and maybe change the pullback to 130 points or 140 points. So, however many pips you're looking at, just add a 0 to it. So this is 15 pips or 150 points. So I'm pretty content with that on the 15-minute myself. Now if we just go to 30-minute, and this is more of an eyeball thing. It's some people want more structure, some people want less. There is no right or wrong. I can tell you right now I could do with a little bit less structure on the 30-minute. I don't personally use the 30-minute for structure, more for POI selection, but I would up this just a little bit and see if it makes a difference. And usually if I can just clean my charts up a little bit so they're less noisy, that makes me pretty happy. Now, it didn't make too much of a difference here, but overall I have tested these numbers and they do work for me. Now let's say we wanted to clean it up a step further because we're not happy. Because like I said, some people like more structure, some people like less structure. And there is a fine line where you don't want too much structure, but not enough structure can be dangerous too. And the simplest way I found that is simply eyeball the structure itself. And then once you have the structure eyeballed, go back and backtest it and see if it makes sense to you or not. Now this didn't make a whole lot of difference here, but in this case I'm pretty happy with this structure. So whether it's 220 or 240, this makes no difference. I'm going to go back to 220 because for me that worked when I backtested it. If we go over to 1 hour now, and as you guys all know, the market structure indicator has an algorithm built into it that if you have a time frame that's not selected, it's going to do the math for what you have for pullbacks and find a happy median. To give you an example, whatever I pick for 1 hour and whatever I pick for 4 hour, if I went to 2 hour, for example, it's going to take an average of those two numbers, and it's basically going to be like, okay, well, if 1 hour pullback's this and 4 hour pullback's this, I think 2 hour pullback should be something like that. It's very important that these numbers stay in order so the algorithm knows. What I mean by that is smallest time frame to largest, and as you can see, the pullbacks increase. If you were to say throw 1 hour in here where the 30-minute is and the 30-minute over here, the algorithm would actually be screwed up because it doesn't know what numbers to use. But if I just look at the 1 hour structure, like this isn't horrible to me. I don't mind this myself. Just because I have tested this a little bit, I just go up a little bit higher again on this. I don't even know if it'll make a difference on this or not. But again, this becomes just a matter of me eyeballing it and seeing how clean it looks and ultimately if I consider that structure or not. And I basically sit there and go 10 or 20 points up and down at a time till I get structure I like. Once I have structure I like, I'm going to go back test that structure and see how it works for me in my back testing. So the numbers we're currently looking at GU, they're tested by me. I like what it does. So I can tell you right now, the 4 hour overall, it didn't make a huge difference for me. This is a tiny bit too much structure. I did go up to a 50 pip pullback on the 4 hour. And I believe it does make a little bit of a difference on this. I forget now. I think it did. I think on the daily it didn't make much difference. I don't use daily structure for a whole lot, so it's not a big deal. But I'm pretty content with that for structure. Like if I look at any of this, this is exactly the way I would map structure. You have a break, you have a pullback, you have a break, you have a pullback, you have a break. And ultimately, I would map that as structure even without the indicator. So I'm pretty happy with that. Now if I go to the daily, once again, we do get a few too many dots, and sometimes structure does get ugly, and unfortunately, the only thing you can do is try to play with the pullback numbers. And sometimes structure just has to be a little uglier than you want. So that did actually clean it up quite nice. This is how I like to see daily market structure. Like I know some of you guys, I've seen your charts, and some of you guys do mark a little more structure than I would mark. There's nothing wrong with that. There is no 100% formula for pullback or structure that'll work at any given occasion. But these specific numbers that you guys see, these have worked for me for GU overall. I like these numbers. That's basically all I did to figure out the pullbacks. Now let's go to an even more aggressive pair here. So if we look at the 15-minute right now, that's absolutely gross. You obviously would not want that for structure. That's just, it's a headache, and too much structure is dangerous. Not enough is also dangerous, so we're just going to go back and do what we did before. Now, with GJ, since it even moves more than GU, I'm actually going to go a little bit above what we went on GU. And reason being is, again, you want that balance between not enough structure and too much structure, and you want to find yourself somewhere in the middle if possible. I actually know what happened here. 2 seconds. I might have too many signals going here. But now if we look at that, that's a little more proper. I don't actually like this. Oh, I see what happened. So here we do get a break, and this is the lowest point before this break, so that is structure 100%. But if we look at it overall, this is pretty clean structure. I like that for 15 minutes. Now, if we just look at this, let's go to the 30 minutes, see what we got. And the numbers will just go up. Start with the basics and go up. Again, if I look at the 30-minute here, I could probably say a guesstimate would be somewhere around 25 pips for a pullback on the 1 hour, or 30-minute I should say. And the more aggressive a pair gets, basically the bigger the pullback. That looks pretty legit to me for GU. That's pretty clean, or GJ, sorry. But yeah, that looks like decent structure to me. I'd map that as structure. Heading over to the 1 hour, we're going to do the exact same thing. We can probably go to a 35 pip pullback, just guesstimating. I haven't traded this pair in a long time, but I do know that it will always work better with larger pullbacks, as any more aggressive pair would. So if I just look at that on the 250, seems pretty legit. So a 25 pip pullback on the 1 hour makes sense. It looks like it's working decent. That's all structure to me. That's properly spaced structure. It's not too much. It's I'm pretty happy with that overall. Now let's go to the 4 hour and see what we get. And again, for those of you that don't like the market structure indicator, you can just manually map this. Now that's definitely a little intense. I wouldn't mind getting rid of a few of these. Again, being the aggressive pair that it is, I would likely do something like a 70 pip pullback, 60-70, somewhere in there. You definitely don't need all of that. If 70 is too much, we'll change it. That, again, looks like pretty legit structure to me. So I think I'm okay to roll with that. And the daily will definitely need more than, yeah, we already knew that. So if we just look at this, we can start off with 1200 maybe and see what it does. Now that looks like pretty legit daily structure. It actually looks like really clean daily structure. So that's pretty much all I do to determine pullbacks. Now, like I said, you guys can sit there and try to determine pullbacks for gold and NASDAQ. The numbers I posted in the group do work. I don't like them. I don't use this indicator for that. And you'll probably want to wait for Brian's video, which should be coming up shortly as well. And he'll show you how he maps structure. And that's actually the way I started mapping myself for gold and NASDAQ. It just works better. That's all there is to it, guys. It's a matter of personal preference, what you think works, and just cleaning up your chart. You can pretty much eyeball it and see if you have too much structure or not enough. Just to give you an idea here, let's say we did some way larger pullback. You can usually take a look at things, and that actually doesn't look horrible, believe it or not. I wouldn't even be against that. It might be a little much, but you can usually eyeball something and see if you got way too large of a pullback or not enough. And like I said, guys, personal preference. This to me is a little bit of not enough structure for my liking, but if you guys don't like a lot of structure, that's how you would do it. But yeah, like I said, you can usually look at something and determine if you got too much structure or not enough. This to me seems like the right amount, because here we did end up going bearish for the better part of 2 months, and I think something like that should be mapped. Whereas the numbers I had before, I believe it just had structure here and here, and you didn't actually have these bearish dots. And not having any bearish structure on the daily for a couple months. That wouldn't be my favorite thing because clearly it did go into a downtrend for a little bit. So find that balance, and like I said, guys, you just have to play with it. There's no 100% formula that works all the time. But the GU and the EU numbers that I gave you guys, those are tried, those are tested, and that's what I currently use. And like I said, you guys can use those numbers to build off if you want to change them a bit. Anyways, guys, have a great rest of your day,